And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Wednesday afternoon. I think we have Wednesday. Yes, Wednesday. I hope you all had a great trading week so far. As always, before we jump into the markets and my portfolio, we'll have to get the usual disclaimer out of the way. Everything that I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using during this live stream, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and read the Elliott Wave Principle. You can read this wonderful book for free when you use the link that's in the description down below. And you can also use that same link or another link down below to get yourself a physical copy. Now, that said, if we jump into my portfolio, we can see that we have another break-even start into the day. Portfolio is unchanged. We have a small cash amount. That's not enough to increase our position substantially. We hold 600 shares of GameStop, which is our biggest position, 300 shares of NEO, and last but not least, 50 shares currently of Immersion. Against the GameStop and NEO shares, we are writing covered calls to earn premium while we wait for the stocks to increase in value. And for Immersion, we actually expect a drop to 669 to hopefully buy another 50 shares. So we have a full 100 and can also write covered calls here. With that out of the way, we can jump into the chart and actually first start at GameStop. We can see it looks like there's a relatively green day gonna happen, or at least the first indications for everything are relatively green. GameStop, when we zoom in, it's unchanged. We still wait to see if this point here proves to be the end of wave 4 and if we're now going to see the expected 5th wave or not. Our options expire on April 17th. Now, April 17th, yes, so we still have a little bit wiggle room here. Once the markets are open in 2.5 minutes, we will also check if we can roll them for a decent credit. However, we would only do that if we can roll them at the same strike or higher without adding too much time to the expiration. Because obviously, if we roll them now, we basically add on risk having the shares called away, because I fully expect that eventually the stock will go further up. Outside of that, not much to say here. If we look into NEO, similar things. We finally have the potential end of the correction that I admittedly originally called wrong here and somewhere here. Actually, to be precise, originally it appeared as if now, originally we had the assumption that we might only have wave 3 here, and we had the bounce here, and now how did we have it originally? So now that's the big question. Where was the original retracement? Either way, called it wrong twice. The last time here at the 78.6 retracement level. And obviously increased our position as we went. That's why our position is at a small profit, because the last time we bought was somewhere here. And against our 300 shares, we're selling covered calls at the 650 strike price, because our minimum target, if this indeed is wave 4, or if this turns out, not wave 4, if this is indeed wave 2, so since we have 5 waves up, would be here. Even if this turns out to be A, B, and C before we go further down, then we still would expect to go up to at least the $7 or $8 mark. So therefore, having our calls written here means we kind of ensure that worst case, we get our shares called away and miss out on a little profit. Or worst case, the price obviously goes down and we at least pocketed some profit. But considering or assuming that we're right, and from here we are going further up, we at least pocket some profit along the way. Now, considering how Tesla is struggling on the EV market or in general, it stands to reason that somebody else fills the place. Obviously, Tesla is or was or both hugely overvalued. So that doesn't mean that another company will suddenly be hugely overvalued, but I believe that NEO would have the chance and the pattern to actually increase further in value. Oh, God. Yeah. Sorry for that. Yeah. Even though it's the middle of the afternoon, somehow I'm still sleepy, or I'm always sleepy around this time of the day. Yeah. Anyway, moving on to Immersion. As I said, in Immersion, while it's possible that our correction finished here, I expect that we will get another push down to the 61.8 retracement. We're on a weekly chart, so we're talking about the next couple of months for this to happen. Until it happens, until I'm proven partially wrong and we just go up from here, it's going to be very, very short daily summaries of immersion. If there is no, I don't know, surprise jump by 10% or more, yeah. That about that. Now, markets are still not, or should actually be open now. So yeah, they're open now, which means we can first and foremost actually check SPY. I'm tempted, to be honest, to play here a little bit, but we have to consider basically we have a long move down and what appears to be a free wave move up followed by the next beginning move down. If you look on the hourly chart, it's not that clear because then this could potentially be a 5-wave move up, 1, 2, 3, 4, 5, A, B, C, and we would get another 5-wave move up before we resume the downwards journey. Question would be if we look on a lower time frame, yeah, we also don't get a much clearer picture. It looks like this is a free wave move, so that might actually mean that today we get a relatively strong green day. Question is, I will probably do that after the stream. I don't want to haste with burning money, but we might want to jump in on that ride, even though we only have a couple $100 budget for, in quotes, those short-term trades. But as we can see, the premium for zero day or 1 day options would actually make it almost affordable to start such a play. We obviously would have to consider, even if we buy the, for example, performance profile. So if we buy the call, that the break-even price would be at 567.74. Although right now we are at where are we right now? 562. So there is a long, in quotes, a long move just to make it to break even. That's with the 1 day option. If we go here and say we buy the 0 day, so 0 DTE, we can see that it's 565. So it's still around $2.60 far away from the strike price, and we're below the strike price, which means basically that, or not basically, but which means obviously that we would need that's current, yeah. So we would need a substantial, at least 1% upward move to pocket a decent profit. So I'm gonna think about this and evaluate it, and maybe we don't get to it this week, but at some point next week it would actually be nice to try to also use the little cash that we have available, maybe to make more out of it by playing the shorter term movements. Anyway, for us right now, moving on, we can look into the crypto area. So we're still waiting for Bitcoin to basically confirm to provide us with further evidence that we at least finished the wave A down here and are now seeing a wave B up. If that were the case, we would expect basically 5 waves, 3 waves, 5 waves up, which might, from a psychological perspective, reach the $100,000 mark again and bounce there before we then get the next 5 waves down. I still believe that the downward trend here isn't finished yet because visually we only had 5 waves down. I don't necessarily see a 3-wave corrective pattern in here. Might be theoretically possible in some form of A, B, and C, but it feels more like this is a 5-wave move, at least to me, and therefore it would only be part of the correction that might then be followed, as said, from a wave B upwards, and then we get a wave C further down. And obviously, even though we only hold a small position in Bitcoin, we would like to leave it then at around anywhere above 95,000, so that we actually close it at a small profit. If that doesn't happen, we're just going to hold that small position, even if it means holding it until next year or longer before it is break even or in profit. But that's what's going on in Bitcoin. Algorand has a green day, so we'll guess within the next couple of days we'll know for sure if we bounce here at the base channel or at the top of the base channel, slightly below the 100% expansion level for a 3-wave A, B, and C. Although I'm also not 100% happy with this pattern, to be honest, but that's what we have right now. Or if we're going to get to see the 78.6 retracement and hit the median of the base channel as well. Crow is irrelevant for us. HNT, bounced nicely at the 61.8 retracement on the weekly chart. I guess the next 3 to 4 weeks will show if from here we finally get our next upward movement, or if we are slowly going to make our way further down and maybe potentially eventually invalidate the pattern. Storage. yeah, there we hold until, yeah, like the little bit of storage that I hold, I actually got from running a node, so I don't consider that it cost me anything, although technically we paid electricity and whatnot for running the node, blah, blah, blah. But yeah, unless we break the 20 cents mark on 19.33, we're just going to hold, because there's still the possibility that this is some form of bigger correction and that we from there then go further up. So that remains to be seen. XRP having a nicely green day, but overall it should still go further down to hit the 38.2 retracement level at 161. And XYO also having a nice bounce. So we bounce now at the top, at the bottom of the base channel. We are very close to the 100% area for ABC. So it feels like XYO actually has the potential from here to make it up further and give us the fifth wave that we, in my opinion, are still missing. We have 1, 2, 3, 4, and now a fifth wave should take us at least to 34 cents, which would be a more than 100% increase. Makes me wonder if I should not swap some of the spare Bitcoins, or yeah, not Bitcoins, but Satoshis more likely, yeah, that we're holding, and throw them into XYO right now, because we don't hold that many XYO at the moment. Yeah, so, but that sums up the crypto area. On the other front, curious about Frontline. I said there we finished, in my opinion, the correction after earnings and should potentially be in the next 5 waves up. Let's see if we get a chart. And in the meantime, we can check for GameStop if we were to close out our April 17th covered calls and replace them with, which means $35. So strategy builder, buying the 35 April 17th that we have, and in return sell the May 2nd. There is no 35, which is a little bit of a problem, which only leaves us with April 25th. And if we basically sell those instead, we are looking at $120 in premium that we can get. It's not a lot. Question is, at which point is it worth the effort? Yeah. Like thinking about it, so when we started out writing cash secured puts and covered calls, we usually dealt with weekly expirations. And while obviously the premiums for longer expiration dates are higher, it also removes flexibility. Or the premiums, looking at it short term, are higher. It also removes flexibility, because if the price moves against us, we actually have to, or we have less wiggle room to, or we have to add way more time to the expiration to get out of the situation we don't want to be in. And very often in combination with paying a credit, paying a debit instead of getting a credit. So doesn't feel like rolling it for maybe $100 overall, and adding another week of expiration to it makes sense here. On the other hand, if we look at NEO, since we're already at it, and there we have the April 25th 650 covered calls. If we buy them back and roll them out to May 2nd, there we don't have any bits, so we don't get a price. If we go to May 16 and we roll to the $7 call, we could actually do that for break even. That doesn't bring us a lot, because it basically would mean we can lock in $150 in extra profit if it goes up, but we would have to add 20 days to expiration. If we instead roll down to the $6, we'd make $54 or basically $51 after fees, but also add 20 days. So we're not going to do that and just leave it as it is for now. Frontline chart doesn't want to load. Okay, then let's check SMCI. Again, it's going to be interesting to see, but I believe that we have a 1, 2, 3, 4, and now are going to get our wave 5. We're on a daily chart, so within the next 2 to 3 weeks, we should see the break of this trend line to confirm that this was just a correction along the way. Visually, it's already relatively obvious that this is 5 waves up, 3 waves down, 5 waves up. And considering that the waves are almost identical, this has to be a corrective pattern. So while it's possible that this still drags out sideways or so, I don't expect that we will go higher than 66.44, potentially ever. And that we instead will eventually see further 5 waves down that will take us below the low that we had here at 17.25. Now, yeah, let's see if we can, yeah, XND. I'm really kicking my ass for not paying attention and that we basically missed out on this entire ride here. Once it started, I mean, hindsight is 2020, yeah, but once it started, it was kind of obvious. We can get rid of the auto Elliott wave on this one, yeah, don't need it here. Question is here, I mean, we're on a daily chart, but there we shouldn't use XND. We should use actually that one here or NQH5, so that it's, no, that's also mini, NQX. No, that's also not it. There we also jump overnight or not. Yeah, so that one should work. So it's interesting with the naked eye, we can see that we have a potential 1, 2, 3, 4, 5. Even wave 5 subdivides relatively nicely 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5. Third wave 1, 2, 3, 4, 5, and first wave is a little harder, yeah, but still visually it looks like we have 5 waves finished here, which means followed by 3 waves down, followed by potentially another 5 waves up. So although on the other hand, we already have this here. Actually, looks like we finished a relatively perfect 3-wave corrective move, where this is wave A, wave B, and wave C is, as I said, relatively perfect, almost 100% same length, which means actually it looks like we're in the next 5 waves down, where we now have 1, 2, 3, 4. 4 might be finished, and then now wave 5 further down. So in the NASDAQ, we might actually now continue our journey further down and eventually break 19,200. Yeah, I can just cry about the profit missed out here. Yeah, but yeah, as an option play, it just doesn't make too much sense because of the expiration. I think what would make sense is if I trade that on eToro actually with not with a 20 times leverage, but with some leverage and just throw $1,000 in or maybe a little more and basically just put the stop loss here, for example, and short it, because overall it's life-changing money that I missed out on here, to be honest. Yeah, it's like really hard to accept, in quotes. Overall, it's possible, or not possible, but overall we are now correcting at least this entire 5-wave move, which means we're still a couple thousand points away from where we should go in a correction. And that's if we are only correcting this. If we're correcting the bigger history, we're talking about about a price here, so about a 50% drop or more. And so the question is obviously, how do you jump in while keeping your stop loss at a reasonable level? We'll have to think about that. So options might work, but for options we lack, or I lack the capital here, because I would need to, if we take the XND. So if you look at the prices here, it's basically $4,000 for a single option. You can actually, 1 second, I'm going to bring over option strat. So let's see if we expect the NASDAQ to go, or NDX to go to 16,700. And we say by there's not a single, unless we say it's earlier, but so they're basically cutting the time short is what makes the profit. But the risk reward ratio, I mean, that would be a good risk reward ratio, yeah, but that would actually work. So just sell one. Of course, I forgot about that. Yeah. So if we basically sell one put and buy the other. So if we say even at a closer expiration, so if we pick even today, if we sell, so it would be binary and we would have $470 risk. So yeah, of course, and the further we go, 510. That looks to potentially be the next ABC, and then from there we should actually go down. So it's really, it's like there are so many levels to trading. The first one is having an opinion, and the second one is actually being confident enough to share that opinion. But the final level is putting your money where your mouth is. So and owning up to it. So not just if you have a losing trade, you don't tell anybody about it. But and when you have a winner, you go bragging. But basically, to be transparent about what you do. And there's a huge difference between, okay, this looks like we finished an ABC pattern that's almost perfect, which it does. But then the question is, did we already finish this corrective move that takes us up to give us the next 5 waves down? Although they would be smaller 5 waves down, and we finish this wave, we get another upward move, and then we get a bigger upward move down, ideally, So, which makes this as an option play even harder, because an option play is always also about time. So if I make this trade on a broker where I can just basically short with a small leverage, especially the CFD version that trades 23 hours per day, Monday to Friday, and I don't have huge overnight risk that basically my stop loss gets skipped or something like that. So if I short it like that in the CFD version, I have in quotes more control. Although with the option, I have fixed limited risk, but it's also frustrating if I were to say, okay, we're gonna break the level. Currently, we are at, or last stand was, delayed was 500, so close to 600. So up 575. And that's just, it's not a good risk reward ratio. It's like basically like flipping a coin. And if you're right, yes, you make a profit, and the profit in this case would be slightly bigger than the loss. But if you're wrong, you basically, is there another step? No. So if you're wrong, you lose the same. So it's not a good risk reward ratio. And that would already require putting $1,000 up and give us only 2 weeks time to be right. Whereas on the other hand, if we go further out, that might actually be interesting, but it just requires so much capital in quotes. I mean, maybe for your account is not much, but I don't have $5,000 spare in the portfolio just to make, I mean, just to make 6,000 by the end of 27. Although in this case, one could go much shorter, but still, it's tricky. So there would be a few good setups. And I think maybe just gradually shorting it might be the smarter move. So stop loss would need to be, if one wants to play super safe, it would need to be at the all-time high up here at 22,000, of course. So considering that there is the possibility that the current, I'm gonna just roughly place that, but that the current correction, we see we are roughly at the 21.4% retracement. We would expect to reach the 38.2. So maybe this correction hasn't finished yet and there's more room up, and I'm just misreading this area here. Maybe it's just, so 21.4 is the one that we usually don't have on the chart because it's the least likely, but it is where we are bouncing here pretty much twice. And so this would be sufficient as in some form 1, 2, and then we get a strong, although that's already a relatively strong move. So unless that's A, B, but then B is definitely not finished yet. So Tricky, yeah. But so shorting it would still be the easier option, either with small capital here and the stop loss here, even with some leverage, and then just keeping it open and basically see how it goes down over time. And if you get stopped out, it's not the end of the world. Then you just have to enter again, but with lower leverage or no leverage, and the stop loss basically up here, because I'm relatively, or I believe that from here we will go down much further. Yeah. So, but yeah. Anyway, overall for our portfolio, not that relevant at the moment, because what's relevant for us is the big positions that we have, which are GameStop, and yeah, it's the only big position. And NEO is the other one that's interesting. And as said in immersion, we still will have to wait a couple of weeks for this to play out and potentially hit our extra order. Let's see if by in GameStop, by then we already reach the option expiration and have our shares freed up, or basically so that we get more flexibility again for or 2 right covered calls. Yeah, I think we're gonna call it a day here. So I hope you were able to take something away from today's stream. Yeah, don't forget, like, subscribe, enable notifications so you don't miss out on future episodes. And if you have any specific questions, either join the next episode or leave them in the comments down below, and I will try my best to answer whatever questions you have during the next episode. Thanks for watching. Have a great rest of the day. See you then. Till then, bye-bye.